Welcome back to Gold Seek TV. I'm here with the president and CEO of Fortuna Mining, Jorge Ganoza. Thank you for joining us.
Peter, pleasure to be in your program again.
Well, thank you for joining us right after your latest quarterly results. There are some big numbers that you had out a day ago. I'd like to cover this a little more in depth so we can understand the huge increase in cash flow numbers and what's going on with the different CapEx projects and so on. But later on, I'd like to also talk about some of the big recent discoveries. We haven't spoken in some months, so we have some big news out of Seguela, Kingfisher discovery, and also the other projects. So if we could start off with the latest quarterly results, you stated some huge production numbers, over 100,000 gold equivalent ounces. We have strong silver components still there. So if you could give us some highlights on how the quarter looked, and if we could talk a bit more about the huge cash flow numbers that are coming in from the increased production, but also now with an increasing gold price, which I believe you had a few $100 more per ounce increase in the average realized gold price from the last quarter with the rising gold prices. So it's starting to really show up in the bottom line.
Yes, as you pointed out, we delivered 116,000 gold equivalent ounces in the quarter. And so certainly we benefited from the rising prices for gold and silver with that kind of production, right? So just to give you a sense of things, in the previous quarter, the first quarter of 2024, we sold gold at an average realized price of $2,087. And in this fourth quarter, our average realized gold price has been $2,334, right? So on the back of that strong production and those higher prices in the quarter, we managed to, generate sales of $260 million with very healthy margins. Or EBITDA was $123 million, giving us an EBITDA margin of 43% over sales, or cash flow from operations before working capital adjustments was $93 million. And if we look at cash flow from operations, after all the money that we have to invest back in the business on sustaining capital concepts, we generated $39 million of free cash flow, right? So all in all, a good, strong quarter on production, sales, and healthy cash flow generation for our business.
So with this strong cash flow generation, like you said, you have invested it back. Most of it is going, this last quarter appears to be going to the Lindero project as you built the tailings project. If you could talk about more about the capital commitments that went towards Lindero and how that's going to impact the company in the second half of the year, and how what was that? I guess when you look at the total free cash flow generation and cash flow generation, there was two different numbers. So I think that the issue, not the issue, but the discrepancy there is because of the huge investments back into the gold project in Argentina.
Yes, if I want to help focus the conversation a bit here, there are three important aspects of the business in the quarter, right? One is our capital projects. Two is our exploration initiatives that are yielding exciting, thrilling results. And last, the refinancing that we have done and that has allowed us to strengthen our balance sheet, right? So if I may, going back to capital projects, there are two capital projects that are worth talking about. Firstly, the Lindero leach pad expansion. This is a very large capital project in our portfolio this year. this project alone is $42 million. So at Lindero, you can think of the annual run rate of reinvestment in the business hovers around $20-25 million a year. If I look at our life of mine projections, pretty much $20-25 million a year is that what that mine demands in terms of annual capital investment. This year, that budget is $65 million, driven mainly by this one large capital project. The Lindero leach pad expansion that we're executing this year will set the mine for the next decade. We will be able to place reserves in the leach pad for the next decade. Now, it's a project that we have to execute in 1 year, right? So the project is 64% complete as of the end of the quarter. And we estimate the project will be finalized and receiving ore. No, we'll start placing ore on that extended leach pad facility probably by October, November at the latest.
Wow.
And with that, the capital project ends. And so to give you a sense, the Lindero all-in sustaining cost, this one project weighs approximately $400 in the Lindero AISC. The Lindero AISC right now is hovering around $1,900 to $2,000 per ounce. And this one project weighs $400 in that AISC. So, it's a heavy project, but, once concluded, the mine is set for the next decade. And
so those costs will return back down towards that 1,500 area.
Yes, Lindero today is more a $1,500, dollars per ounce, all-in sustaining cost, and this project weighs $400. So you add on top of those $1,500, the $400 for this project. Once the project is done, those $400 should go away. And also, the leach pad expansion weighs $400, as we just discussed. When we consolidate the all-in sustaining cost for all of our mines to produce a consolidated figure for the business, that one project weighs almost $90 in the consolidated AISC.
Yeah.
No, so it's a capital intensive project, heavy this year, but once it's done, right?
And the production was a bit down for the last, I believe, quarter. Was that related to this work or other?
No. In the second quarter, we contended with two challenges. One, we had lower mechanical availability on the front-end loaders. For those are part of the mine fleet. And second, we had a scheduled maintenance that overextended and required more spares and things. So that slowed down the rate at which we were planning to place ore in the leach pad in the second quarter. We don't see at this stage those second quarter issues as a threat to meet guidance for the year. No, so at this stage we are not revising guidance. We don't see the risk for the year. No, I believe we are in a comfortable position to make up that loss of ounces, which is not that large in reality, and make up for it. No, so we have a plan in place. We're executing. The mechanical availability on the front-end loaders is where we expect it to be, and exceeding our expectations. And the planned maintenance in the mill is behind us now. No, it's been executed. So all in all, that project is advancing, and once done, we should see the AISC at the mine and on the consolidated basis, reverting back to more ongoing projection levels, right? The
Okay.
other project I want to highlight, Peter, is the Seguela optimization of the processing plant. The Seguela processing plant was designed and built to have a throughput capacity of 154 dry metric tons per hour, right? We operated that processing plant at a rate of 208.
Yeah. Wow.
At a rate of 208 dry metric tons per hour in the second quarter, reaching a peak of 230.
Wow.
So we believe there is a lot of value there to be extracted for the business. The mine is meeting the higher throughput demand of the mill when we run it at the higher rate. So that is an important opportunity that we are capturing for the business. And I believe there is more we can squeeze out of that lemon as well.
Yeah, that's way over the design capacity.
36% above design capacity is what we have been able to achieve without any significant investment. Every time you build a mine, a facility, you leave in the design room to accommodate, deviations or variations in the design parameters or, the hardness of the rock and whatnot. It is not always that you can capture all of those opportunities in the design in these different components of the processing plant. So, you sometimes are able to capture some, and others become bottlenecks, precluding you from operating at a higher rate. In this plant, we have been able to capture all of the opportunities built into the design. That's why we're being able to operate the mill almost at 40% above nameplate capacity. That optimization allows us to capture tremendous value for shareholders.
Yes, and it continues to kick off very healthy cash flow numbers. It seems to be the gem of the company. This is an incredible asset. I don't know if we want to talk yet about some of the recent exciting the Kingfisher discovery or not.
Yes.
Because that was I believe that was back at in the springtime. I don't know, in March or April when you made this initial discovery. But you're continuing to be very active with it, and it looks like you're on the path to produce your first actual resource on it by the end of the year. So how aggressive, what is it that you're discovering? What kind of hits are you getting there? And what's, I guess, the game plan, since it's, I believe it's not too far away from the big Sunbird deposit, which has also been yielding some excellent results for you in the last years.
There is nothing that creates more value in this business than a discovery, right?
Mm-hmm.
And we're thrilled because we have made a very exciting discovery at Séguéla with this Kingfisher prospect. Now, let me tell you why it is so exciting. One, this is a blind discovery, right? What do I mean by a blind discovery for your audience? It does not have a surface expression. In West Africa, a lot of the major deposits in production today, or that are being advanced by different companies across the region, most of them, if not all, have had some sort of artisanal mining history or have a surface expression. Kingfisher does not have a surface expression. It was discovered by a systematic sampling where over the deposit, which by now has been defined for a strike length of 2 kilometers, in our grid sampling, soil sampling, as we're covering the entire land package with soil sampling through auger, auger drilling for collecting samples. Out of the entire grid in that area, we got 1 weak gold anomaly in one sample. And the team decided to drill test that single point anomaly out of a grid that covers a very large area. And it is through that one drill that we discovered Kingfisher, which, as I mentioned, today strikes for 2 kilometers with varying widths that go, as wide as 80 meters.
That's
right?
incredible. I mean, there were some huge values there too. Gold values I saw 30 plus, was it, grams
In
a
our
ton or
June
pounds?
news release, our latest news release or latest update on Kingfisher was on June 20th. And we had holes like 133, which intersected 24 grams gold over an estimated true width of 18 meters.
Wow.
We had a hole 1795 with 6 grams of gold over 12 meters. We had hole 1833 with 6.4 grams of gold over an estimated true width of 20 meters. So broad widths of high-grade mineralization striking over a strike length of, as I said, 2 kilometers, and the deposit remains open along strike and at depth. So we have drilled up to now 14,000 meters. And with this, it is through those, I believe, as 113 drill holes, 14,000 meters, that we have, we're starting to give shape and form to this, to the geometry of the deposit. I can tell, as I said, that it remains open to the north, south, and at depth. And we'll continue drilling non-stop until the end of the year, with the aim of producing a first resource by year-end. What we expect is that we will have a first largely inferred resource, as we are not, our aim right now is trying to define the size,
the limits of
the limits of this. So in that first attempt, we'll likely have a large inferred component, but it's looking very exciting. And this one speaks about the exploration potential of the greater property. Remember that we have a property package that we cover from north to south, 35 kilometers, 35 line kilometers from north to south in our property. And Kingfisher is only located 4 kilometers away from our processing plant and main antenna pit in production today. So as I say, it's right under our noses. It doesn't have a surface expression. It's hosted by a shear zone, a shear structure that we had not identified before. So we're learning a lot as we advance this discovery, and we're trying to extrapolate that knowledge to our exploration programs. We already have with this one 7 deposits, 8 deposits in the camp, and I have high expectations with respect to how many more we can find. And this one is located in a bit of a different geologic setting than the other deposits, even though we are so close to, only 4 kilometers away. It's a bit of a different geologic setting, right? A different shear zone, let's say a different corridor with respect to where our other deposits sit. So it is opening up the field for us tremendously. And we're thrilled. We're very excited about this one.
That is exciting. I guess my next question just got answered, because I wanted to ask about how do you extrapolate this discovery and look for other potential deposits like this, since this is such a different geology than what you were expecting to give this kind of the results. So that was going to be my next question to you about extrapolating the data from the discovery at Kingfisher and using this new geology, which is hosting this new, this gold found in this new geology weren't expecting it to be hosted in. So with this new information, how will you be able to now look at the rest of this huge property size and maybe find other Kingfisher prospects?
As I mentioned, it's a large land package, so we are drilling, we're learning more, we are conducting an orientation geophysical survey to look at the geophysical signature of the deposit and see how we can extrapolate. We have a very large land package, so we have many different initiatives going on at the same time on the exploration front. Soil sampling, auger drilling, and now different geophysical tools. And with this one now we're trying to understand it better to see if we can extrapolate our learnings. So it's an exciting time. Really, we're thrilled about this discovery. We expect it will be meaningful to our production profile.
So Seguela is just doing excellent. It's producing past the capacity you expected. You're finding new discoveries. It's got a lot more prospects, but that's not the only exciting, exploration work that's taking place up in Diam Sud. You have also been very active in this somewhat recent acquisition, which you started off, I believe, with confirmation drilling, and now you're starting to look at other potential satellite deposits. So if you could give us some insight to what kind of work is being done there and how that's looking.
Yes, and before we step out of our conversation on Seguela, just let me remind why Seguela is a flagship asset in our portfolio. In the quarter, Seguela operated at around $500 per ounce cash cost. AISC was at around $1,100. Tremendous exploration potential, tremendous short-term growth opportunities, and long-term growth opportunities as well. So that's what makes Seguela a flagship asset in the portfolio. With the same enthusiasm, we're advancing our explorations at Diamba Sud, which is in Senegal. And we have paused the drilling right now because of the wet season. So we are also on a phase of putting together our geologic models after several months of drilling. We've been drilling since November of last year. We're putting together geologic models, making sure we understand the deposit geologically before we put out a resource estimation, right? Resource estimations, those geostatistical models need to be always supported by a robust understanding of the geology. And this is a new deposit for us. And before we publish a resource, we just want to make sure that the geology is very well understood. And that's what we're doing right now. No? So the drill program has been one, focused on infill drilling, enhancing our knowledge of the ore body, and second, trying to expand it at the same time, right? We have made some exciting expansions and confirmations within the historic resource that we acquired. But so at the same time, we continue advancing with engineering work, and our aim is to have a resource estimation by year end and a preliminary economic assessment in the first quarter of 2025. And if things go accordingly and we achieve our minimum thresholds for a construction decision, it's something that could come considerably quickly.
Excellent. Yeah, that's exciting to hear. That was a recent acquisition. It was about a year plus ago. Was it Chester that was the acquisition? So you've been you dove right into that one with confirmation, infill drilling, and
Diamba is in a most exciting geologic domain region. Only a few kilometers away, we have the Lulo-Gunkoto complex owned by Barrick Gold. And that complex produces about 500,000 ounces of gold annually. And it's been doing it for a number of years. A bit further south, but still within the same geology and structural controls, we have the B2 Gold's Pecola deposit, which is also a mine that produces north of 400,000 ounces annually, right? So that's on the Mali side, across the border. No, we are on the Mali-Senegal border zone. We're on the Senegali side, and these mines are on the Malian side, right? So it's a most prolific neighborhood.
And lots of big majors involved, and a lot. I mean, in West Africa in general, as we've discussed before, is quite exciting part of the world for gold exploration and mining right now.
There is no other region in the world that exhibits the type of growth in resources, gold production over the last decade, even 2 decades. No other region in the world. If you do a ranking of cost and capital efficiency across regions, West Africa is a top jurisdiction as well, right? Where ounces are produced at a lower cost and with less capital intensity.
A lot of excitement in exploration work and the potential there as well. It's feels a bit of like a frontier land to go in there and look for new deposits.
It's not for everybody. You need to be well suited to manage the challenges of developing nations, young democracies, because that's what you find there, right? Just to give you a sense, the GDP of gross domestic product of Burkina Faso is $16 billion a year. The GDP of Cote d'Ivoire is around $80 billion a year. Just to give you a sense, you move to Mexico, and the Mexico GDP is $1 trillion a year, right? So these are small economies, developing nations with young democratic processes. They're all hungry for investment, particularly natural resources. So they are very welcoming in that sense. But there are challenges. It's a different operating environment, business environment. You just have to be well suited to manage those complexities, right?
And maybe we can end off with Mexico and talk a bit about San Jose. We know that it's in the process of working through a mine closure plan of sorts, but it's not quite set in stone how this, I guess, will end. There's multiple options, I believe, on the table for the company on how to approach this, and if you give us an update on where that is at, because you did have a new vein discovery. There has been also a change in politics. I don't know if that has if that has any influence or not in what's happening in Mexico. And the price of silver and gold going up. Not sure if that helps to bring maybe some other lower grade material, potentially make it viable or not. So I'd be interested to hear a little bit what's going on in San Jose in Oaxaca, Mexico.
San Jose has been a pillar for Fortuna's production and financial operational performance for over a decade. Remember that mine has ranked among the top 12, 13 primary silver producers in the world for many years, a low-cost producer, tremendous cash flow generator for Fortuna. But it's coming to the end of its life of reserves. We brought this mine into production back in 2010, 2011, and for over a decade now has been a tremendous asset. And as things stand today, we should be exhausting reserves by the end of the year, early next year. having said that, what are we gonna do, no, with San Jose? Well, we see three options for San Jose today. One is we exhaust reserves, and we call a progressive mine closure plan and monitoring, no, like you do when you close a mine. A second option is we need more time to assess exploration opportunities, to see opportunities on the optimization of existing resources, because we're exhausting reserves, but not resources. The mine still has over 20 million ounces of silver in resources.
Wow.
Last year, we were not able to convert those resources to reserves, right? Now, as you pointed out, things change. Silver price might be higher. The devaluation of the peso over the last weeks, going from 16 pesos to the dollar to 19, certainly helps. Is that going to be a trend? So, so we're also looking at ways in which we can be more efficient, effective, optimized, and bring those resource ounces to the reserve. We're considering the exploration opportunity around Yessi. So perhaps we need more time for that. Then we decide to place the mine on care and maintenance while we do all of this work, and this work carries on. And the other option is one where we can just continue mining at a smaller rate out of these resources, no? So those three options are still on the table.
Okay.
We plan to have a better view of which of the three avenues will take sometime in this third quarter. A lot of that work is taking place right now, right? So I don't want to get ahead of myself, but those are the three options. Okay. The analysts community, no, analysts with the large banks that cover Fortuna and smaller houses already assign basically no value to or NAV derived from San Jose. No, they are assigning zero value to San Jose, or very little value to San Jose in the Fortuna valuation, right? I think we've been very clear and transparent on the evolution of San Jose through the years with respect to reserve replacement and whatnot, and we are where we are today. But there's still optionality, and we're seeing how we can best capture that option.
Great. Well, that's helpful to know how the company is viewing this, the different options out on the table, and third quarter here in a few more months should know the decision. And it is interesting to know. I think notice from other investors, it's pretty much just written off in their minds. So if there is a positive decision, it could just more be an upside to the valuation models.
Yes. If anything, there is upside there today that we're trying to see if we can capture it.
And one other big thing that happened the last quarter was restructuring. I don't know if you call it restructuring, refinancing of debt. You got a lot lower interest rate. If you could explain what this, I believe it was 150 with an allotment. So in the end, was it about $175 million debt convertible raise? So give us some insights.
Yes, we had we believed it was a sound moment to access the debt market through a convertible note. $172 million is the net proceeds of the issuance. It's a 5-year note with a strike price of $6.30. Fortuna is trading today at around 420, 430 US, no? So, and a rate, no, of 3 3/4. So what we have done with those funds is pay in full the bank facility that we had with a syndicate of lenders, where we were paying almost 8%.
Oh, yeah.
Right. We had about $125 million in the facility that we just paid in full. and we have taken our cost of money from almost 8% to 3.75%, right? So that lowers our cost of capital, gives added flexibility to our balance sheet. I like to refer to our concept here is we want to put together a fortress balance sheet. That means a balance sheet that can help the company navigate through multiple scenarios. This is an industry of upheavals, and a fortress balance sheet is key, and these are times where you need to do that. And also, be competitive as we move to capture value creating opportunities in the jurisdictions where we operate, be it an acquisition, a development project, right?
Mm-hmm.
Why were we able to acquire Roxgold? Roxgold, yeah, it was certainly a controversial acquisition, Peter, back in 2021, but today I think everybody has to recognize that
Yeah.
it was a very strategic move that has set the company for the future,
Absolutely.
So why were we able to capture that opportunity? Because we had a very strong balance sheet at the time, and we deployed the capital on a deep value opportunity. And so, we're not, as I say, deal junkies. If you look at our history over the last 20 years, we've been careful, but never shy when we see an opportunity. No,
That's for sure. Yeah.
and we have a liquidity available to us today of about $350 million, and we like to think of ourselves as prudent capital allocators. We'll continue that, but we have a lot of powder, a lot of firepower in the balance sheet, and a balance sheet that again can tolerate upheavals, can help us capture opportunities, and a business that's generating free cash flow, uh, in this environment.
Sounds like an excellent position to be sitting in. All the past investments and work to get to this spot. You appear to be more in the driving seat than a lot of other companies I follow. It's obviously a very capital intensive business, exploration and mining and so on. So yeah, it is very nice to see the balance sheet just improving and getting so strong. And it's interesting to hear some of the ideas that you may have behind what you might do with all this liquidity. You do see in the marketplace still, even though gold's at 2,400 or hovering around $2,400 an ounce, the stocks are still haven't really taken off, which I found, the excitement's still not there. I mean, for most investors, it almost as if gold has never hit a record high in the last months or year. It's almost a stealth bull market in that sense. It's not on the radars of of the media and others on Wall Street. So does that still, you think, present opportunities in the valuation of some other exploration companies? That seems there's some exploration companies that just seem to be absolutely still just dead and struggling and maybe
Absolutely,
cash starved.
absolutely.
So
Yeah, I have to say that from the market for mining equities in our precious metal sector, uh, I think it's a very tough market. No, I think that I've been in capital markets for close to 30 years now, and yeah, this is probably one of the toughest. And not because there had not been really difficult markets years ago, but in the late 90s, early 2000s, it was a very dreadful market, tough. But again, gold was trading at under $300 for a while, and silver under $4, $3 per ounce, right? So correspondingly, mining equities were in the tank. Today we're in historic highs, and the exploration companies, the developers are struggling. So we as Fortuna have been able to capture the opportunities presented to us. One of those, the more relevant one, has been the Roxgold acquisition. And second, the more recent one in September of last year is the Chesser acquisition, which brings to us the Diamba Sud project in Senegal. Chesser had done excellent work over since they got involved in Diamba Sud, I believe in 2019. So in a short period of time, they identified a deposit, they developed it on the exploration front and grew it to almost 1 million ounces. And every time they had to raise money, they had to do it at a lower price.
Mm-hmm.
So they eventually capitulated.
Mm-hmm.
And that presented an opportunity for us. And so, yeah, and we're well suited to be competitive on identifying and capturing those opportunities as they emerge.
Sounds great. And as a final remark or question, or just to mention, you did make a name change from Fortuna Silver to Fortuna Mining, but you still continue to produce around 1 million ounces a quarter, but your gold component has been really growing. So that appears to be the main reason for changing the name to better describe the company.
Yes, Fortuna Silver Mine, silver has been, part of our heritage. For your audience, for the benefit of your audience, we were focused on silver when we put together this company. Yes, absolutely. We were focused on silver. One, because I am a Peruvian national with experience in mining in Peru and Mexico, which were at the time the two largest silver producing countries in the world, right? Silver was trading at $3 or even at below $4 at some point. So no one cared about it. So we said, let's see if we can find a niche here in this forgotten space and identify opportunities we can bring back into production. And so we had a strong geographic focus in Peru and Mexico, and we had a strong commodity focus in silver. And that was our strategy.
Mm-hmm.
And we stick to that strategy for many years. But as companies grow, strategies and the environment changes, strategies adjust as well. So, when we put Fortuna together, when we put this original strategy in place of pursuing silver in Peru and Mexico, Fortuna had 3 employees and no money and big ideas. No, 3 employees, no money, and big ideas. That was Fortuna in 2004.
Wow.
No?
Yeah.
Today we are over 5,000 people, top quality professionals from many parts of the world, diverse talent. We have a Canadian, a US, a UK, Australia, Peru, mining, Mexico, engineers. We have $350 million in liquidity available to the company. We produce, we're going to generate over $1 billion in sales this year, probably in this price environment. So Fortuna is a much different company today than it was 20 years ago. So of course the strategy has changed and evolved over time. No, strategy is not something you change, every year. Absolutely not. But so today we're still focused on silver and gold, but we identify more opportunities in the gold space. And more than a love for silver or a love for gold is what asset makes the most sense within the concept of precious metals, right? So it either be gold or silver, it has to make strong sense, it has to present a deep value opportunity, and we'll pursue those. There are certainly more opportunities in the gold space than the silver space for that. Right?
Mm-hmm. Excellent. Well, congratulations on a huge growth story. 3 employees and no money to where you are now. 5,000, did you say it's over 5,000 employees now?
Over 5,000 working across 6-7 jurisdictions, 2 continents,
Wow.
listed on the New York Stock Exchange. We're going to generate $1 billion in sales. This quarter, we generated free cash flow from operations of $39 million. No?
Yeah, incredible. Congratulations, and thank you for your time and giving us an update today. Looking forward to the coming quarter, the operational results, the exploration work, and the exciting discoveries, and see how this all plays together. Hopefully, we continue to get a strong gold and silver price to finally reward all of us investors who are getting frustrated with the mining markets. But I think this is the last part of the cycle and one has to be frustrated with. It just seems like we're just so close to breaking into the more mainstream recognition and getting a new group of investors to join us. Because when you're starting to look at some of these results, I mean, my gosh, the valuations on some of these mining companies are starting to get a little too
Yes,
ridiculous.
I think we need to see a bit more, conviction on the gold price, which has been climbing quarter after quarter after quarter. If that conviction to the upside continues, I am sure that people will start paying more attention. I see more, in my interactions with investors, I see more generalists
Mhm.
starting to come in and being inquisitive about the sector. But certainly nothing like we experienced back in 2009, 10, 11, no?
Yeah.
As I say, those years, as a mining CEO, you could have endless meetings with investors in, the financial capitals of the world, like New York, London, Zurich. You could have endless days of meetings with investors that were all had a keen interest in the sector. Today is still a market where you see mostly specialists and some interest increasing from generalists, but not significantly, I believe.
Yeah. Well, I'm waiting, and good time for those who in my belief, this is an excellent risk reward opportunity in the entire sector because we already had the price breakout and the crowd hasn't joined us yet. So as long as the prices continue on this path, this trend, I think this is one of the bigger moves that I've seen since I've been following the sector since a teenager. So it's starting to get exciting, but I understand the frustration from the investor side because they expected things to revive very quickly. But I think you mentioned in the past too. You need more we would need to see maybe $3,000+ gold to resemble that excitement and the profit margins that we saw back in the peak.
Well, the profit margins are not there because the industry is average cost is what, 1,500, 1,600 today. 1,500 is creeping
Yeah.
up. 1,500 a few quarters ago, I would say 1,400. Now you look at the majors like Barrick, Newmont, $1,500. So things get crazy. You need another $1,000 on the gold price. You need you need to see gold taking to 3,500, no?
Yes. Well, let's see if this move continues to keep going. It's really not that too far away to see that $3,000 mark. I know there's some analysts who are predicting that, but one always has to be cognizant that this market does like to take its time and make its own moves, and does it when it does move, it seems to move quickly, and it does like to frustrate a lot of investors in between. But it is getting more exciting, and watching Fortuna get to this point where it's at, and you're very well situated to capitalize on this move. So it's nice to see the company in such a great shape here, and looking forward again to how the coming quarters build out, and we'll follow up with some updates then, and get your feedback on the latest news from your end.
Perfect, Peter. Thank you for the opportunity to speak to your audience.
Yeah, thank you for your time, Jorge. Have a good rest of your day.
I have to rush to another meeting, Peter.